If you're thinking about co-signing on somebody's mortgage, you probably have a lot of questions on how it works and what to be careful of. So I'm going to go over these points with you. First of all, when you co-sign on somebody's mortgage, it helps them in the way that we take all of your income and add it to their income, all of your monthly debts, including your housing expense. So this is including taxes, property taxes, and homeowners insurance if you own a home, or rent if you don't. And then their proposed housing expense, and all of your debts and their debts. We also look at everybody's credit scores. So a lot of people think that if the person that they're co-signing with has lower credit scores and you have higher credit scores, that this can basically take the place of the person with the lower credit scores. And actually, it doesn't work that way. How that works is everybody has 3 credit scores generally. And so we pull all of the credit scores for anybody that's on the loan, throw out the high credit scores and the low credit scores. So we're left with everybody's middle. Then we use the lowest middle credit score that's left over for the loan eligibility and just underwriting the credit profile on the mortgage. So a co-signing situation is really just good for qualifying numbers like debt to income ratio, which is the ratio of your monthly expenses versus your monthly income. So then the first question that I get most commonly is, how long do I need to stay on this mortgage? So the answer to that is, as long as the mortgage exists, then you're on the mortgage. So the only way to get off the loan is if you refinance, and then that person can qualify for the mortgage on their own, or if the home is sold and then that mortgage is paid off, and then they move on and then buy a new home with their own mortgage in their own name. So some people think that you can just sign a quitclaim deed and come off the title, but all that does is take you off of the asset, which is the house, but you're still on the mortgage, which is the liability. So that's not going to solve the problem. So the other question is, well, is this going to impact me in qualifying for a home loan? And yes, for a while. And yes, if the person that you co-sign with struggles with their payments. So when you co-sign, you are obligated on that mortgage. And even if that other person is making the payments, then if they run into trouble, you're the backup plan. So it will go on your credit. It will be used in your qualifying numbers, unless after 12 months of making of the payments, that person can provide you with documentation that shows that they've made the payment from their own account with their own name on it. So don't set the mortgage payments to come out of a joint account. Little piece of advice: don't do your name and their name on a mortgage or on a bank account and then pay the mortgage from there, because then that shows that you're making the payments, not them. So the payments need to be paid out of their own bank account and need to have consecutively 12 months. I had a client that was so nice, and they gave their son as a birthday present or a Christmas present, either way, a mortgage payment. They paid their mortgage for that month. Well, then they wanted to buy a house that year, and we had to use that mortgage payment in their qualifying because there was a break in that 12 months. So be careful with that. Generosity is amazing, but be careful with how it's documented in a mortgage situation. So where to be careful, some pros and cons on co-signing, where it benefits you and where you need to be careful. So co-signing makes sense when the person that's going to be living in the house and making the payments can make the payments. So there's sometimes where their income doesn't meet qualifying income standards. So like if they plan to rent the rooms out to, somebody else, and they're going to have help making the payments, you can't really use that on mortgage qualifying but that's real income that they're going to have, that would make sense that they would have a cosigner in that situation. Or maybe they have bonus income or commission income or something like that that's new, that is really part of their income structure, but it's not being factored into the loan. Self-employed people also show much lower income on their tax returns in a lot of cases, and that's not matching up with the reality of their life. So those are some really common times when a cosigner can come in and really help. You do need to be careful though, because in a situation where you're co-signing for somebody and maybe your income is, up there and theirs is maybe not up there, we don't want to put them in a situation where the mortgage payment is going to be a struggle for them and set them up to fail. So there has to be some discussion with your mortgage loan officer about what's actually going to be able to be done. So maybe that person has a large asset that they can draw from. Maybe there's income that's not being factored in, or there's things like that. There has to be some conversation around that. So hopefully that helps in your decision if you're going to co-sign with somebody on their mortgage. And if you have any questions, reach out. I'm here to help.